2023. Thanks for being our trading buddies for the day. I hope you get something out of the show and maybe even a dollar or two if we can pick up a trade. Speaking of which, let's get stuck in, shall we, and have a look at what is going down on this Monday morning, evening, afternoon, whatever you might be. Share that one. Okay, quick updates on, I think, the only order that I had in the market, only trade I had in market when I left you on Thursday. Didn't turn out so good, and that was CAD Swiss. Howdy, Paul P. Those of you who are in the Telegram group, however, would also be in the short on CAD Swiss, which is currently playing out. Where are we, CAD Swiss? There we go. So I'll get back to this a little bit later in the show and explain to you why we should not have taken the trade to the upside, but how we're now in a trade to the downside. Haven't quite made up the loss, but looking a little bit better than it was earlier in the day. All right, so forget about that one for a bit, and let's go talk gold and the London Open, which is about 3.5 minutes away from now, and how we're going to play this. All right, the range today is the high of the current bar and the low after the second bar of the day, which of course is Tokyo Open. The low is at 1850.73 with the daily pivot 184958. Dreadful place to go short, eh? Untested daily pivot just below us. Yet that's not a filter we've added at this point for this breakout. So 1850 it will be the entry for the short, and the long will be entering at 1859. The target's pretty obvious to me today. For the short, the target will be here. Maybe a little bit low, but I reckon that's the level. It's above DS1, and for the long, the target will be DR1, pretty much just underneath the monthly pivot. That's pretty obvious to me. Okay, so we'll wait till the clock ticks over, and we'll see how that one pans out. If we go higher than that, obviously we'll move. If we go lower than that, we'll obviously move it. Now, how's this been going, guys? Last Monday, refresh my memory, the low was here. The high was, wow, I've changed everything. The high was there. So low there, high there, got taken in short. If you followed the rules and traded at DS1 or got out at DS1, you would have done okay on Monday. On Tuesday, there's the high, 9 o'clock bar. That's a 7:08:09. No, that's 10:09 is there. So you would have been short here. And again, at the low, you would have taken your profit. That's all nothing. Long here would have worked. On Wednesday, Thursday, I know didn't work. And Friday, you would have got long above that bar there. And hopefully there was something in the road there like a DR1 to take the profit. So providing you're prepared to take the profit at the resistance levels or the support levels, you would be doing okay last week. The trick, of course, with this is you've got to trade all the time, every day, because if you miss one, you're going to miss the one that works, right? And if you take the one in the week, you're going to get the one that doesn't work. It's pretty much a numbers game, so you've just got to be there each and every day. All right, we're getting close, so let's place the orders. The long will be the first one that we place. And again, those of you here for the first time, welcome, firstly. But secondly, you want next to nothing on this trade because it's very much a case of we don't know how it works best yet, or if it works at all. So, like I said, the entry for the long will be 1859, 1859, and the stop loss will be the entry for the short, which was 1850. 1850, and you can put the take profit level in now for the long. It is what, 1863, let's call it. 1863, it's all out at that point. And there we go. Long is in place. The short, the reverse of that, of course. And we want to buy stop. Sorry, we want to sell stop. Pending order. Sell. Same volume, next to nothing. 1850 is our entry. And sorry, guys, I've just got to admit some people into the room. There we go. Stop loss, 1859. 1859, there we go. And take profit level for this one is 18. Sorry, the sell, aren't we? Yes. 1844. Righto. No, I wasn't born in 1844. A little bit later than that. Not much. All right. So now we've got both orders in the market. Going long here, exit here. Going short here, exit there. And as soon as one triggers, we will cancel the other. Got it? If nobody has any questions on that, we will move on. If you do, if you've been not around whilst we've been doing this, then please either do nothing or ask some questions if you're uncertain. But most definitely, if you are looking to trade this, trade it at a very, 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 very small risk. Okay, I've just got to check questions in YouTube before I go anywhere, guys, and then I'll get on to my analysis for the week. Righto, all clear. Hey, told you half an hour ago, Swiss inflation rate. Yes, that's what drove the CAD down versus the Swissy, told you. And fortunately, I'm now in that short. We'll see how that pans out. We'll get to it a bit later, as I said. All right, so going from gold, we go, I've updated you on my orders and my trades, or the one of them. Now let's go and have a look at, if I can find it. Getting close, I'm sure. Or have I lost it? Looks like I've lost it. There it is. Okay. So it starts with Aussie CAD this week. Aussie CAD on the weekly chart. What we're looking for here for, guys, is a candle to tell us a potential direction for the week, or to give us a bias for the week. And those of you here for the first time, these are not necessarily tradable bars. They are simply that, giving me an indication as to what direction we may be looking. And I may indeed be absolutely counter what they're telling me. And the reason for that is everything has to be taken in context. And if these are not contextually sound, then I won't be looking at them in any way, shape or form. First one being Aussie CAD, as I said, suggesting that we buy this week. And am I against that? No, I don't think so. Reason is, I don't have an Aussie CAD analysis chart, but I'll show you on this one. Yeah, you can see this level through here where it's been support, support, junk, resistance, 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 junk, support, support. You get the message, right? It's a level that the market absolutely recognises. And that's precisely where we've been in the last week or so. In fact, last week. So we're bouncing off that level currently. What the market's done this morning is gap to the downside, not by a great deal, but enough for me to consider that if I did want to trade this, I could put my entry here above the bar, stop loss here, and I'd be relatively comfortable, with reason being, if the gap means anything and they just gap and go in the direction of recent momentum, then this will go back, pardon me, and take out the low of that bar. If, however, that's not the case, and this bar does mean something, bouncing off that level, it should provide enough momentum to get to a resistance level, that being the monthly pivot. Now, do I like the candle to trade it? I have to look at a few things, not least of which, does it agree with what the big picture tells me? And the big picture is on the monthly chart telling me what? Is it telling me that we're in a downtrend, we're in an uptrend, or are we simply going sideways? We look to be trapped in a band here between 94.32 and 91.39, so 300 pip band here, where we've just rejected the lower level multiple times, and we've rejected the higher level on a few occasions, most recently only a month ago. So am I confident of direction? Well, I suppose on a micro scale, I am confident that we're going to bounce and go back to this level to some degree. Am I committed to that? No. But if I got the opportunity to trade that, then why not? So then I have to work out, it's a yes then on that basis. I have to work out then, is this worth the risk to get the reward? And what I see here is a risk. If I can find the top of that bar, it'd be interesting. There it is there. So the risk that I would have to take if I'm to trade the candle is 120 odd pips. Monthly pivot is about 30 pips away. So it's not good enough for me. I want to see something a little bit better than that before I run into a resistance level. And even if I got to there, I think the next level is still less than 1-to-1, and that's probably target area in that vicinity. If you take into consideration that this could well form a head and shoulders off the top of that range as well. Left shoulder, head, potential right shoulder, about the monthly pivot level. So I'm not confident that we're going to get a lot out of this. Yes, we could go to the top of the range, as I said, but for the first instance, I don't think it's worth the risk. So I'll just move on from that and go to the next one, which is Aussie dollar. Again, suggesting that we go long, and this one's not so bad in terms of reward to risk. You've just got to be committed to the direction, and I can easily do that because the chart pattern is telling me that we put in an inverted head and shoulders, or this potential to be the right shoulder. Not a massive bounce off the backside of that trend line, or trade line as I call them, but it's there. And until we get below that, I've probably got to adopt a bullish outlook. What's the big picture? Big picture's pretty much sideways, but recency, you'd have to say we're in a downtrend. Lower low, lower high, lower low, potential lower high. It's at this point, therefore, that I think we've got a turning area. And again, above that line and that confluence, I'm entitled to be bullish, but we're a bit below it at this point in time. So it makes it tough. It makes it really tough to be committed to a direction here. If I'm to flip a coin, I'm going to go, okay, I want this, I can see this going along. But at this point in time, I'm seeing one thing that says weekly charts telling me a bounce off the backside of that trend line. And the other thing's telling me I'm trading straight into a resistance level. What do you do next? CAD Swiss. Well, I've been trying to get long on this for the longest time, as those of you who've been around will know. We've still got an ascending triangle sitting there. We've still got a range that refuses to break. And as I said to you last week, if we took this long, we really want to take it long from down here somewhere from support. Yet, silly me, broke that rule a little bit and tried to trade the break and retest of the top of that range and failed. So we didn't get an ABC. What we got was, here we go again, false break back into the range. So I've got to be thinking we're going to the bottom of that range again, and hence the short that I'm in will be terminated, if you like, if we get down to this level, pretty much the trade line. So do I want to go short? Well, I am short, so I can't really say go short now. What I can say is if and when it reaches this trade line, I'll probably look again to switch positions and trade it back to the top of that range. I'll be looking for false break at that point. So in terms of the weekly direction, I think it's probably right, and we're in it. But I don't see that there's too much reward to be gained there either, to be fair. Euro Aussie. Euro Aussie is suggesting that we go short, and I'm all over this in terms of directional bias. Gapped up this morning, and I'm pretty sure that if this high is taken out, we're going to go back and test. You can't see it on that chart. We go to the monthly. That one's the one I want. Sorry, these are all over the shop because they're different currency pairs, of course. Okay. Now it's messy on the weekly. Let's use the horizontal level. We can see that quite clearly. If we do go and take this high out on the daily chart or the weekly chart or any chart you look at, frankly, the recent high, if we take that out, I think we're headed back to 161 area, so 161.50 perhaps. However, if the game changer bar, I call it the game changer bar because it is a reversal bar and it is a key reversal bar. Why a key reversal bar? Because the high is higher than the previous candle and it's closed near its low. It hasn't closed on its low, but it's closed near its low. This is also the potential for, it's a little bit twisted, but another left shoulder, another head, another potential right shoulder. Problem with this one is similar to the problem we've got with all of these potential reversals or retracement candles this week. We're trading straight into pivots, straight into support levels. So if you want to take the small profit that's available, by all means do so. But if you're looking for more reward on your risk, then I would suggest that this is not the one to take because you're trading straight into that monthly pivot again. Do like the directional bias, however. Euro Kiwi, well, rinse and repeat is exactly the same. The one thing I would say is you got your entry below the pivots if you wanted to trade this short. Don't like the fact that it's come off the bottom of the bar and it's done that twice in a row. That bar not dissimilar to this in one respect. The only thing that really is standing out here is that price rallied way through those highs, but came back underneath them. That's interesting. Bias again, directional bias I like. I'd like to see this maybe on a daily chart break resistance. So put in a high here maybe today, and over tomorrow, Tuesday, Wednesday, we might have a high there. By Thursday or Friday, we might have a false break of resistance, which is what I'm probably keen on taking. Directional bias good, but entry not so good on the weekly chart. There's only a couple more, so I'll whiz through them before I go to Ash. Euro Kiwi, we're talking about, we've got to go to the next one, which is Pound Aussie. Once again, directional bias, in my opinion, is sound. Once again, we've got the monthly pivot that we're trading straight into. So I just skip that immediately. Don't need to do any more analysis on that. If it were to rally, however, again, and give me a potential false break of resistance, then I'd get interested. Pound yen, same, exactly the same. You know, big bar, trading into an untested monthly pivot, no thanks. And I think the last one is dollar Swissy. Now, the Swissy news, of course, has forced this a little bit lower. I don't mind this because we are bouncing off a resistance level as well, and that game changer bar from last week is suggesting that we go short. I'd be most keen to see what happens if and when we hit the monthly pivot here, because it is a strong support level as well. You can see the resistance that it's provided. This, what is it, 93.10 level, let's call it. So monthly pivot hits here. I'll be looking to buy this, I think, at that point. I don't know how dramatic the Swissy news was. I think it was CPI figures. So Ash will probably update us on that shortly, and whether this is strong enough to really erase, I suppose, if you have a look at this a little bit wider. Really get rid of this strong bounce, lovely tweezer bottom sitting there at a support level. Maybe I've got that support level just a little bit high, but the result's the same. And a very strong follow through on the back of that tweezer's bottom. And this looks to be a retracement to me. I think this is an excellent buying opportunity on dollar Swissy. And that's where I'll be focusing a lot of my attention this week on the daily chart, just looking for something that suits my eye. And I've got to say, if today's candle somehow got down to the monthly pivot and produced pretty much what we're seeing at the moment, so a red body and a long tail to the low side, I'd be very tempted to trade it, get some profit in the bank at that resistance level, and then see if this can actually reverse, because this is reward versus risk personified. That's exactly what I'll be looking for. So if we can reverse or actually continue this reversal, we've got a triple bottom sitting here. This is the potential higher low. If that suits my eye, as I said, I'll be trading this long tomorrow maybe. First take profit there, then just let it rip and see how far we can go with it. That is dollar Swissy. And that is it for the game changer bars. I've got 1, 2, 3, 4 on my watch list that we'll go through a little bit later. They're nowhere near entries at this point. So let's go and talk to Ash. Then, of course, we'll talk to George as well. My goodness me, it's 17 minutes past. Jesus, I can talk.
That's all right, mate. You had a lot to get through. That's the thing at the start of the week, isn't it? You just got to get prepared, really. Yeah, going well, mate. Going well. I think a few interesting things. The first thing that I'd really like to show everyone is this, because there is a concerning signal now. Whether we sort of have a look at this and say it is a genuine signal is really to everybody's decision. But I just wanted to bring it to everybody's attention, and it's WTI.
Mm-hmm.
Look at where we are now. This is currently the 6th of March. Now the 6th of March is here, when we tend to see this high and then a big, I mean, not just a drop, a big drop. So it looks like right the way through March, particularly March, that's the end of March there, but right the way through March on a 10-year scale, a 75% decrease in the price of oil tends to transpire. So that's just just something to be aware of. I don't know whether it's something that people trade necessarily because it is a seasonal bias, but it's just something that I thought I looked at yesterday when I was looking through the seasonals, and this is the most extreme. Out of everything else, this does suggest that we would get a big dip down in oil. Now, if you
actually,
look at
I'd be interested, and Swee, if you can, and I don't know if you're following it at all, be very interested to see what Astronarchi says on oil, because today is a time by degrees day as well. So my good mate Phil tells me that would suggest a turnaround is either imminent or
interesting. I don't know whether the Astronarchi is related to oil. I know it's related to gold, but I'm not sure if it's as related to oil. But I did think that was a really interesting looking. If you sort of like cast your eye right along the year, there's nothing that looks like this. Everything else.
No, it's a real cliff, isn't it?
Moves higher, yeah, but nothing quite as vicious as this. So for whatever reason, now it could be tax year, it could be lots of different things, but for whatever reason, there's a huge dip down in oil. Now tends to be a huge dip down in oil. Now, if we compare that to the dollar, and what tends to happen to the dollar during March, the dollar does tend to be high. You can see that actually if we track it from today, it's not a huge move to the upside, but it is a move higher, by 4%, but it's relatively flat. So what this now drives us towards is possible positions in oil to the downside, and subsequently that would suggest we are looking to buy the dollar. Now, if we don't have an opportunity to, if we don't have a reason to buy the dollar, no reason really to be looking for huge downsides in oil. But if we are looking to buy the dollar, oil looks like a really good option just on the seasonal sort of play of it. And we'd have to look at some fundamental drivers as well. But on the seasonal play, it does look like it may well be the one to trade. Now, looking down the list, what's going to drive the dollar this week? Well, nothing today. There's not a whole bunch kind of coming out today that would suggest that we're going to get any real momentum with the dollar. But as the week progresses, this is where it starts to get interesting. Tomorrow, Fed Chair Powell is testifying to Congress, and I think he's got a two-day meeting with Congress as well. So let me just see. See if he's in here somewhere as well. I'm not sure why he's not, unless it starts on Wednesday. I'm not sure whether it's no, I think it does start on Tuesday. So anyway, so he's obviously a market mover, so we need to watch out for what he's saying. Lots of jobs numbers, and we know that it's the jobs market which is really kind of stuck the market in this guess of what the Fed are likely to do. JOLTS jobs openings have become really key for the market. Here we go. Oh, there he is again. So that's that's Wednesday. Yeah. So it's a two-day event, mate, where Jerome Powell is due to speak. Does he say anything? If he says anything to do with disinflation, then the market's likely to rally because that's what it did last time. If he doesn't say anything to do with that, and he holds the narrative and he suggests it's about the jobs market, and the jobs market does come out to be strong again, then you would expect the dollar to start to rally. You would also be looking at the crude oil inventory. So if the inventories are building, it would suggest that that some of the demand is possibly leaving. You've got some of the Cushing, Oklahoma as well, crude oil inventory. So you'd want to look at these numbers as well. So there are. It looks like Wednesday could be the day to be potentially looking for a trade in a short WTI, or certainly leading up to Wednesday, if there's a position to be taken leading up to Wednesday, and then maybe holding it through and seeing if these numbers and a possible release by Jerome Powell would enable that trade to continue. We have had numbers from China, and I think they were a little bit disappointing today as well. So it could be a driver. It could be a driver for oil. I can't see why they're not being reported on here, but we have had some reports from China where their growth is, I don't think, quite as stellar as many people would have liked it to be. So there are some opportunities potentially, mate, and that's the one that's been kind of I'm driving towards this week. And there's also things with some of the currencies. The pound looks a little bit tenuous as well. We got some construction PMIs today. Don't think that's a big market driver, but it's when we get into the latter part of the week with the pound. Halifax HPIs, they are probably going to be showing some signs of weakness. But again, I'm not sure whether that's going to be the main driver. But the main driver looks to be on Thursday when we kind of get down to Friday, sorry, when we get down to some of the GDP data and the trade balances from the United Kingdom. Kind of late to be looking for a position to hold on to, but if something sets up before it, I would have looked for these to be bearish. I would look for sort of some negativity with these numbers. So there might be some follow through by Friday. So looking at some pound shorts and some possible oil shorts. But let's bring George in, mate, and see what he's doing. I know he was trading the Hang Seng. he will have a little bit more information probably about the Chinese data, because it didn't come out too well, did it, George? From what I gather.
I didn't see. You mentioning that, and I'm looking at. I was looking at Forex Factory because I'm always looking out of that for that because of Hang Seng, but I didn't see that. I mean, they should have. There is data, but I didn't see it on. Did I miss something on Forex Factory? I'm not sure.
Yeah. So what we've got is just the growth target. I've just brought it up actually on Yahoo. So the cautious growth targets. So limiting the help for the world economy. I think that's what's basically been reported, that their growth targets aren't quite as elevated as people had hoped they would be.
Right.
Whether that's hugely significant, there's still growth there, but it's just not quite as large as people thought it would be. But that would again push us towards some potentially some downside with oil, because I think one of the reasons that oil has rallied so hard is because of the anticipation of the China opening and China growth. So they're looking for some weakness, and it might just dampen some of the spirit, and that might be what created the position for you with the Hang Seng, because you were short in that, right?
I was short, yeah. Let me just put it up. I need powers.
Sorry, mate.
Jeff's the man for that.
Bloody producer job. I don't know. There we go, mate.
All right. Okay, so I haven't done my full analytics, which I'll do, but I mean that news probably explains what took place here, because huge gap down, and when I get that closing beneath the low of yesterday, I want to see where the candle closes, and that tail was the problem, but the market is still bearish. So I mean, the whole morning I didn't see a trade, but then it set up a beautiful wedge top here. I mean, this is as classic as they come. And when I see that, I look for a lower high. We've spoken about many times, and there was, classic lower high. I could have taken that, but I mean, I don't like it to be a couple of candles. I need a little bit more. So 4, 5, 6 candles is perfect. So I took the trade there, and hoping, of course, that the bottom falls out and the market goes all the way down here, and it didn't. But I mean, all these signs were saying to me, just hold in as much as you can. So we had a pullback and a double top. As we had that first pullback there, because I say to guys, if you miss the reversal trade, which is always tricky to take, because if you want to be a reversal trader, you got to be prepared to get stopped out more often than not. And if you don't like that, wait for when the market looks like it's going to get into a trend. So bear breakout, pullback. That first low one short would have been good if you put your order there. But I was already in. I mean, that was only like $30 difference. So I mean, it's the same trade really at this stage. So there's no point taking that trade again. But then we had a problem. I mean, that entry candle had a tail at the bottom, which had I been in that trade immediately, I would have had to decide to get out or tighten my stop above there. But fortunately, I was up here, so I pulled my stop to there, and then I just waited, tried to accelerate down, created a double bottom, which would have been good for the bulls, because if you're a bull and you were buying, you were a bull knowing that you're in a reversal market, you just keep buying knowing that you might get stopped out. So this would have been classic for a bull. But you have had to get out pretty quickly. Then we had a perfect double top. I mean, if you look at the prices here, it's exactly the same price. So, you were not stopped out, so you'd have stayed in the trade. But had you exited above the bull candle, that's the trade you'd have taken. But because I was still in the trade, when I saw that double top, I put my stop down to here. And then when the show opened, as I say, just give me a few moments to decide what to do, because we're going into a close. Where are we now? Yeah, the market is closing in 15 seconds. And if the market closes, then, you're just setting yourself up for either huge gains if it gaps down, or a huge loss if it gaps up. So I'd rather get out before it closes. So I just waited And I got out, I think now, well, I don't know, I think with a bull candle. So I'd pulled my stop down just up to here as we were talking. So I got out of that with, reasonable, I think 0.25% gain on that first trade. But I just couldn't get in the morning. I always say it's not that the way I trade, I can't. But if you're scalping, there have been many opportunities to get in as long as you're quick to get in and out. And I prefer to try and get swings. So when it opens again at 1/4 the hour, I want to see what's happening. Are we gapping down, coming up? This lower high is going to be key. This lower high holds and we get another lower high double top anywhere within there, then I'm going to be looking to go short just to see if we can get back below the low of Friday. So yeah, so that's what held me up, but I was short and I didn't have the news. I gotta find another calendar that picks up Chinese news. I didn't see that.
Yeah, but do you know what? The one I'm on doesn't suggest it either. But Bloomberg reported it. So I the ways that I kind of approach the news is I've got my feed, which Forex Factories basically does the same thing. But I also put Bloomberg on. So if there's anything that I've missed on this, or if there's somebody on talking about something specific, then it should pick it up on one of them. Because it's that's the way that I'm trading. I'm looking for news and data, but I suppose we talked about it last week actually. The fact that the charts will express the news and the news will effectively drive the charts. So they're so interlinked that I think both you and Jeff prove that you don't need it. It's just that that's just my particular kind of approach is to have a look and have a listen to what's kind of moving the market, so I can maybe get driven towards certain markets. But the charts say it.
Yeah, you see, I mean it's interesting to clarify that. So for the guys who are listening, they can decide how they want to trade, because for you, the news is critical in terms of giving you the input into where the market is likely to go. For me, on this lower time frame, I just need to know when the news announcement is going to be, so I can stay out of the market. It's like coming out of the market now before it closes. It's really just it's a news thing, right? Because anything can happen in those 45 minutes. So I'm just interested to decide. Well, I want to decide whether to be in or out, and I'd rather make that decision consciously. I've been caught out a few times before, positively and negatively. But, I want to make money knowing why I'm making money, or lose money knowing why I'm losing money, if that makes sense.
When the news is due, George, you're out, you don't want to get in. But if you're in, do you want to get out?
I've got to make a call. So I'm very happy. I always say like 5%, push to 10%, I stay in the market. Just like plus or minus 5%, I've stayed in the market overnight, which is really a high risk. When I've looked at all the factors and I say to myself, the probabilities here are staked in my favor. So, I mean, if we just have a look at what we had in the morning, if you could visualize this whole thing inverted and favoring the bears, and then we're down here, I could make a decision and say I'm happy to stay, because there's a lot more factors staked towards the bears. But that's really like 5%. So call it rare. Rarely do I do that. Most of the times I have a simple rule. If there's one, like on Forex Factory, one red news announcement, 30 minutes before I gotta make a decision. Most of the times is to get out. 2 red news announcements an hour. And so those days when you have like 4 or 5, then I'm just out looking at my charts. I just don't trade, because just from experience, you get these strange bulls and bears waking up from their slumber, coming to interrupt the market. So rather just wait until it's all done.
Do you so when you say that as well, it's when it's all done. So are you more likely, after you've seen the news event, to maybe go and generate an idea, go and generate a trade after the event?
Yes, as soon as that news candle goes in, I'm starting to think and say, what's taken place? Are there any patterns that were setting up before we got the news announcement that have now completed or are completing. And typically 70-80% of the times by the end of the third candle, so news at 3:30, quarter two, I'm actively looking for trades,
Interesting.
trend reversals. So it's really got to wait for that to close, because I mean the market doesn't take forever to factor in. If we're breaking out, then there's going to be confirmation. If it's a failed breakout, you're going to see it very quickly by the second and third candles. Then you got to decide, okay, what post news strategy am I trading? Is it second reversals or is it a breakout? So I don't go away for as long as I'm out of the market, before. I'm literally staying there to see what's happening, because by then I've got my key levels. I mean, like just now, let's when the market opens at 1:15, so it's like a news event. I'm keen to see, are we gonna, this magenta line here is open of the day. Are we gonna test that or break or gap down beneath it? Are we gonna gap down beneath the low of Friday? Are we gonna come back and completely raise this lower high double top and this other lower high micro double top? So my levels are pretty clear. So I'm not going to wait too long to get information, because it will be baked in, digested quickly as possible. Then I've got to look for the opportunities.
Interesting, mate. So you actually, in some respects, you're trading the news, but you're trading the reaction to what the release was, which is a much better way to trade in a lot of ways, because then the data's known then, and it's sort of what our traders then going to do with the information they have. Actually, on that, we just had some construction PMIs from Europe, which came in slightly better than expected. I don't know if you're looking at a euro chart, Jeff, but there's slightly more positive data from Europe. I don't know whether that's affected anything for you.
It has. It's made it a whole lot better, because I'm on a 30-minute chart and I've got a tweezer top sitting there just above a trade line, and I'm just waiting for price to come back underneath that trade line. With that news, if I'm now not going to get a conversion of that double top, the news should take it through those highs, or at least to those highs. If it doesn't, and it settles back underneath my trade line, and I'll get there when we come back to do a bit of analysis on euro dollar. I've got an untested daily pivot sandwiched together with the weekly pivot. So the setup couldn't be any clearer for me. It's just got to do that. So it's got to come back under the trade line and then retest it before I short.
Great stuff.
Actually, there's a question for all of us from David in the and David, I'll go through your first two questions because all of us can answer this one. Question for day trading the larger intraday swings. I don't know that any of us are intraday swingers, or swingers, swing traders. Let me put it that way.
Yeah.
Not scalps. Do you think it's wise to hold from London to New York or be out of the London close? Now, intraday and holding positions is a skill that I don't possess very well, I've got to say. But my answer to that question is I don't trade between or after an hour and a half of London session, even if I was trading smaller time frames at the moment, which I'm not. So it's a question that I would answer. I'd be out before I go to bed, because I'm only trading on 30-minute charts, right? I'd at least be out, or I'd have a trailing stop in place. That would be my answer.
Yeah, I mean, I think the it does kind of depend on your personality, whether you feel comfortable holding up positions. But really, I think the technical answer really is it depends if it's hit target. Because when you're sort of setting your trade up and you've got your entry and your stop loss, you've got to have your target, because without a target, how do you know what your risk to reward is? So it really does depend if it's hit target by the time the session is closed.
Yes, absolutely.
In saying that, if it hasn't hit target because the market has done something which has been unexpected, for your trade, that's the point that you need to make those decisions. Because I think the first thing that we all need to do when we set up a trade, and I'm sure we all do, is we know where our entry price is. We're basically setting our prices. Here's the entry. There's where we think it's going to go, and if it doesn't go there, where are we definitely wrong on the direction, and that's where the stop loss lies. But if the market kind of does something like it goes near, let's say it goes near your take profit area, turns around again and then starts to come back, then you've got to make a decision about what to do, keeping it open. And I can give you an example of this, because I was holding a position in the euro yen over the weekend, and this is exactly sort of, I was short on the euro yen, and my target was down here. My target was at 03, 44, it was there. My target was at was down there. Now overnight, while I was sleeping, I saw this spike happen here. Now I was in the market up here, so I was selling up there, but it came down there. And the issue is, when it does that, my first thinking is, well, I've probably estimated where the target should be. So I've probably gone a little bit too low. It looked like a pretty good line to me, but I can also see why it would genuinely turn around at this particular area, because we've got kind of, if you look at it on a 4 hourly, then you can see that there's this bar here, which does tend to create a little bit of support. Now the other thing that happened was this 4 hour bar happened. So the information started to change, is my point. The information started to suggest, actually, we may well have got to where a low is in, and we might now be starting to turn around. So when it did start to drift back down again, I took the position and I closed it, and it looks like a good decision now. But when it comes to what you do after the charts, do something like get close to target and turn around, that's another question. Do you move your stops to break even? Do you take everything off the table? Do you take some of it off the table? That's really the next sort of like part of the question. But holding positions, I think, is all about that's what you're aiming for. But if something happens in between times that suggests it might not get there, then that would be the thing that forces my decision, not because necessarily it's a US Open or an end of day.
So if we put aside physical exhaustion and the need to rest your body and your mind, you can trade the full 24 hours. And that shouldn't affect you. I mean, just build on what Ash is saying, then all you need to bear in mind is if you are holding a long position from the UK session and you're going into the New York US session, you just have to be aware that at the open of that stock exchange, there could be some huge moves, that may appear to be reversing the trend that you have. And most of those, at the open, if they're reversals, they could fail. So you don't have to, you can only exit your trades if you're not comfortable sitting through possible reversals. But if you are, and you know that this is likely to happen at the open of any market, then just hold your trades and let it be. If you got the energy and if in the right time zone, just sit through those pullbacks and look for further opportunities. So, the change over, if you like, or the open of different markets, for me, wouldn't affect it. It's like, trading the Asian session all the way through to the end of the day. Just depends, as long as you know where the market moves. I don't know if market moves is the correct word, where reversals might occur at the open of an exchange. That's what you're just going to be aware of. Otherwise,
that was a supplementary question, George, so well picked up. How do you deal with that? Sit through it, right?
Yeah, sit through it. I know, and again, it really comes to personality. When I do Wednesdays at the market, I've started showing guys where you can take scalp trades, and take them and get out quickly. I can't do that. It's not comfortable for me. I just can't, so I won't do it. I've tried it, it doesn't suit my personality. So if you can't sit through it, then exit, let that open, which, we look at it, the first 18 candles go by. And once that's gone through and the market is creating easier to read patterns, jump in again. If you can sit through, just sit through it.
Yeah.
Yeah, go
on, mate.
Can you see David's questions?
No, sorry. You keep going. You can be the question master. You're good at this stuff.
One for you. Usually my target is either the next 30-minute or hourly level. Not sure what that means. 5-minute perspectives or the daily average through range. That's not really a question, but
okay.
Your comment on that.
Yeah. Do you know? I think that's really, where you put your targets. It's tricky, isn't it? I've got a new method that I've been testing, which is putting the Bollinger Bands on and having a look at on the 4 hourly, having a look at where these spikes are with the Bollinger Bands. Looking at the potential price. This is why my target was there, because there's a spike down in the Bollinger Band, and I was looking at the previous area of support, and I thought this bar would create some support here, so that's why I kind of came into that point, but it didn't quite get there. But when it comes down to targets, I think as long as you understand the probabilities of your strategy, then targets sort of like have to start with, well, if I'm a 50-50 trader, then I've got to win at least 51% of the trades. If my targets are 1-to-1, I've got to win 51% of the trades to make this barely worthwhile, and more really because of swaps and fees. That's the first factor. Are you a 3-to-1 trader? And if you are, then you have to understand that you're likely to actually only win 30% of the time, or if you can win 30% of the time as a 3-to-1 trader, then you are making money. So you need to understand that bit to start with. And if you are going to be that 3-to-1 trader, then it's what do you use to find those 3-to-1 targets? Do you use average true range? Do you use the hourly close? Whatever it is, for me, my starting point is always where was price supported and resisted. So if I was entering this here, let's say that I was looking at a long on this particular bar here, then I would know that there is going to be potential resistance, somewhere along here, probably somewhere along here as well. I'd be looking at that. So if I'm looking at this trade and I'm saying, well, it's an 80 pip move to the downside, 20 to that point, but 80 to that has to be my target if I'm a 1-to-1, if I'm a 1-to-1 trader. If I'm trying to win 90% of the time, then I can get these short little ones here. But if I know that that my strategy at least returns 50% and more, then I've got to look at these targets. But for me, it's going to be price points, because really all the indicators are generated by price anyway. So that's why I tend to lean on the price before an indicator. And even when I did bring the Bollinger Band in, it still leans on what happens with the price. I can see this spike down here, so I'm going for where price was supported. I'm not going to aim for, now there is a school of thought that aims for where the Bollinger Band is, but I don't do that. I might progress to do that. I don't know, but that's not my particular method. I much prefer to look at where price would be most sensible, in my opinion, to potentially turn around, because this is a trend to the upside. Let's get rid of this again. This is a trend to the upside. So, oh gosh, oh god, I think I've just taken a trade. Sorry.
Did you mean to?
No, I didn't. I'm just going to clear this up.
Oops. Okay, I'll just talk while you're doing it. You're right.
It's not. No, it's okay. It was just a limit order. I hit the wrong button. Let me come back. There we go. I'm just trying to get rid of this thing here, and you see this thing came up, and I hit that by accident. And what I want to do is get rid of this indicator. Yeah, so this is an uptrend, and if this is an uptrend, there's a low, there's a higher high, there's a higher low, there's a higher high. Now down here it is questionable, and I'd appreciate that. And it's when you come down to the but when that happened, this area is still intact. You know, it looked like really this should have failed somewhere along there, and it didn't. It actually created another high. So this is still in an uptrend. Yes, getting a little bit choppy up here. So it might well be showing some signs of reversal, but ultimately looking for anything that is all of a sudden going to break through these levels, in my opinion, if you're trading short here, would be maybe getting a little bit ahead of myself. So that's why I'm looking in these areas and saying, you know, where if I'm in an uptrend, I need to come out. If I'm trading short, then I need to come out of support, and that's regardless of average true range or moving averages or anything else. But that's my approach, mate. That's just the way I do it. I don't know how you would sort of add to that or take away, Jeff and George.
Well, if it's an intraday trade, and I call an intraday trade a 30-minute or 4-hour trade, then the 30-minute, without question, is exactly the same as you've just indicated. It's got a target, but my target is based pretty much on what the ATR is capable of. In other words, if the ATR is 100 and I'm getting in the market at 30 pips above the low of the day, then I expect I've got 70 pips available to me. If there's a resistance level in the way of that, then I would probably take profit at that resistance level and get myself safe in the market, and then let it ride up until that second level, if you like, that 70 pip mark. So it's based primarily on me and what I expect the market can do in that 1 day period. And that 1 day period is defined by the ATR at the end of the day. And of course, it goes outside that and comes back inside and all the rest of it. But essentially, you're asking the market to do too much if you're trading through the average true range, in my humble opinion. So you need to take profit at that level if you're trading on 30-minute charts or 5-minute charts or whatever the case may be. And George, I'm pretty sure, is going to say he's got his targets based on measured moves, right, George?
Yeah, exactly. I was going to say, I mean, if you look at the chart that Ash has got up here, if you look at that low, exactly where your mouse is, that bull low test there, if I was taking that, I'll be looking at the measured move of just, you know, that little trading range we have there, because that's the so that just low of that candle all the way up to the double top there.
You look at this.
Yeah, and then just do a measured move of that somewhere up there. Yeah, so that's nice. Where I'm taking. And I mean, what the whole issue of knowing what kind of a trader you are is important. And I think a lot of traders don't really give that attention in terms of it unfolding in the market. So, you know, I keep saying I'm a reversals trader, but just, you know, thinking through what Ash is saying, I'm actually like a 3-to-1, 4-to-1 trader. That's what I'm constantly looking for. And I know, and I've said it, I think, enough times that, you know, I'm very comfortable just to win 40% of the time. The rest of it I can manage. I'm happy to get stopped out. But it's because I'm looking for these 3-to-1, 4-to-1s at measured moves. So, you know, but you gotta be comfortable with losing a lot more. If you're not, then, you know, you must just go back and say, I'm a 1-to-1 trader, and or I'm a scalper, 0.5-to-1, and just keep banging them out. At the end of the day, we should make the same amount of money if we consistently apply how we trade. But my targets are all measured moves, leg 1, leg 2s. That's it. Yeah.
Yeah, and you're actually looking for some 3-to-1 moves, are you, George? When you're sort of getting into these trades.
That's what I'm constantly looking for. That's why I'm prepared to take the reversal trades, knowing I get stopped out more often.
Yeah.
Then when I say get stopped out, they're not always at full risk. It means sometimes I stop myself out and I say, it's not going my way, get out.
Yeah.
So a lot are break even. You know, a few are surprise surprises and just get stopped out of full risk. But I'm comfortable with that because I'm trying to find, these 3-to-1s, 4-to-1s on the day.
So I'm presuming when you're looking for these 3, 4-to-1s, this is where you get the opportunity to add into the trade because it does have an extra percentage, an extra percentage, an extra percentage.
Yeah, so assume I'd taken this one, then where we got our double top, that breakout, that pullback there, those two candles pulling back on the,
Yep.
and then I would have been looking to buy above that bull candle.
Yeah.
Yeah, and just see, if I can just put in a little bit more before we get to the measured move.
Yeah, because then you can get your stop up to break even on the first one, and then you've only got one risk. Yeah.
And when you get the first one under that technical level, then the next entry is a double the risk, right? So if I started at 0.25, then I'm going at 0.5, and if I get another one and the stop is at the right level, I'm going at 1%. So I keep increasing the the risk in the market, but the stops at correct level. So if I get stopped out, of all of them by surprise candle, I'm usually only out 0.25 or 0.5%, because the stops are always at the correct levels.
Like it, mate. Yeah. Well, we are getting close to the top of the hour, Jeff. Any other questions?
Yes, I just wanted to tackle this one of David's on the euro, and you guys obviously going to have ideas on this as well. And we'll go. I'll just take it. We'll go to the 30-minute chart. And David, I think you're saying you're filtering your trades on 30-minute candles and trading the breakout on 5s, right? So in other words, if that was the last 30-minute candle, then you'd be looking to trade the breakout on a 5-minute chart, right? I'm not sure what your criteria of getting the breakout direction is, but let's say you're doing OCOs, for instance, then you'd be in the short here now on the 5-minute chart, no question, because there's the 30-minute candle and you're trading the breakout on a 5-minute chart. So you'd be into this already. Obviously, that's not my method of trading. My method of trading, I agree with you 100%. Well, as I say, I don't know where you're getting directional bias from, but there's a clear tweezer top sitting here. I've got the untested daily pivot and the weekly pivot here, which is my criteria of probability, right? I feel that I know that there's a strong probability based on history that the daily pivot will be tested today. So my directional bias is the further that the price moves away from that area, away from the daily pivot, the keener I get, because I'm going to get a better price, in my humble opinion. But then I need to wait for a setup. I just won't trade because I know that there's a 70% chance that we're going down here at some stage today. I need a setup. So your method right now would be fine, but it's not my method. My method would be to wait for price to close back underneath that resistance area, which is in my case this line, this trade line as I call them, and then I would need that retested. And what that does for me, it tells me that, okay, the market is willing to go short if it comes back underneath that candle's close, particularly if I get a retest bar, right? Because what that then tells me is if the bulls are indeed going to take over, they're going to go through here and continue this trend on the 30-minute chart. If, however, that doesn't happen, then the logical reverse of that will happen. And that's where my probability factor of 70+% comes into play as well. So the real confirmation for me is not the warning, which is this double top or tweezer top. It's not the breakout. It's the retest, because that's the one that tells me that if I'm right, I'm going to here, and if I'm wrong, potentially not going to get taken into the trade. So that's my little security mechanism, I suppose. Rather than guessing that now is the time that we're going here, it's calculated based on a break and retest, if you like. Guys, David's method of trading the breakout of a 30-minute candle on a 5-minute chart, interesting. He doesn't say how he's getting his directional bias, however, so perhaps he's doing an OCO, I don't know. David, you might want to comment on that quickly. What's your reckon?
Well, do you know what? It's what if it's a different approach, I guess, to the way that I would do it. But if it's something which is working and makes sense, and that's always the challenge, really, I think, with trading, is that, you know, I'll get driven towards the news and data, but it's not really something that I would suggest everybody does, because some things in the market make sense to you, and some things just don't. You know, some things are about chart patterns, some things are about news and data, some things are about indicators. You know, it just the way that people trade is quite personal, actually, and I wouldn't kind of suggest anybody would change their ways. I suppose the only thing that I would suggest is that there might be ways to tidy up what you do. You know, what George is talking about scaling in. You know, that's sort of like something that might be worth looking into. How can you supercharge the strategy that you already have? I guess it's that kind of thing, rather than saying, you know, that strategy is no good. I think most strategies are probably pretty good. It's just a question of whether they are being traded correctly, and secondly, whether they can be tweaked just to kind of, you know, maybe sort of like do some extra adding of the trades, or maybe sort of like tidying up the risk somewhere along the line. But it's about the journaling, isn't it? I mean, if the numbers look good, then it's a decent strategy. Yeah,
continue to do it. But you know, and there's a further adjunct to that. This, you know, one of the reasons we do trading buddies is so that we can share ideas, and maybe, you know, one thing one of us says, or one thing that David has said today, rings a bell with somebody, and it does make sense, and that's exactly where you just came from. If it makes sense, then apply it.
Yeah,
it's really not that hard, is it?
Yeah, I just think that there's so many different ways to trade, and so many different approaches that, you know, to suggest that one or somebody's way is better than anybody else's
is nonsense.
Is nonsense. Yeah, because it's because you will tend to sort of like be drawn to a specific pattern. Like, I'm always drawn to inverted head and shoulders patterns, but you know, if you look at those things, then they all of a sudden just start to jump out at you, and it's difficult to then switch. And I never really encourage too much switching, because that's what's put me off in the past. It's really sort of put me back, you know, months on end, when I sort of like start to listen to other people rather than just refining what I'm doing. I think that's much more important.
I think that's the key, the refining what you're doing. If it's working for you and you understand that whole trader's equation, your risk times reward times probability, then that's perfectly fine. I mean, this kind of setup we're looking at, you know, like Ash is saying, he sees the head and shoulders. I see wedge tops. So I'm already saying, okay, that's a potential wedge top. Then I would like to see bears accelerating below it. Then I want to see a lower high. And that's what I look for. That's what I see. But you can literally trade off any candle, any bar, as long as you're clear about your risk, reward, and probabilities, you know, and you do it consistently. Day after day, every time it sets up, you just have to execute it for the probabilities to work in your favor. You can't flip and change, otherwise it's not going to work.
Yeah.
There you go, David. Hope that has all helped and not hindered and not confused you. And I haven't seen the next question, so I'm assuming you've consumed all that, which is fantastic. Right, guys, it is that time. I've got to duck out of here. I've got another meeting coming up in about 25 minutes, so I need to have a refreshment and potentially something to relax me in the next half hour or so. So thanks, George, for coming in always. Really appreciate it. We'll see you next week, yeah?
For sure, definitely.
What have you got on this week, by the way, before you go?
Yeah, this week is only, where are we? I'm not even, is this the first or the second week of March?
This is it's kind of both.
Okay, so no, we're going into so it's the second Wednesday of the month. So for those who are subscribed, we've got Wednesdays at the market, either Hang Seng 50 opening session or New York Stock Exchange opening. If you are not subscribed, then 6:30 p.m. Singapore live trading profits, just 15 minutes of price action. So quick, you know, while you're having some coffee or whatever it may be. We'll see you on Wednesday.
Happy days, mates. Ash has ducked away. I'm not sure what he's doing.
I'm still here, mate. I'm just getting a trade on. I've just seen something on the pound CAD that I'm just trading short pound CAD, which I can quickly show you guys. Sorry, mate. I just saw.
Well, you know what I'm going to do with this 30-minute chart on the euro. If I get the bull bar, I'll trade underneath it. Probably put my stop loss above the swing.
Sorry, I have to kind of deal with my stuff before I explain it because I've got like 4 accounts I'm trying to do. Okay, so it's a short for the pound CAD here, and stops are at the highs. Let me just double check the stops at this this higher level here, and just looking for a dip down on the pound CAD, maybe right the way down to the lows. We'll see if we can get down there. Definitely down to this area here. So I would be looking for what would be. Stops are at 1.63832, so I'm looking for 28 to around about 80. So we're looking at around about 3 and a bit to 1, mate, on that one. So pound CAD short is the trade.
Okay, happy days. Righto, we're out of here. Thank you very much for being our trading buddies, everyone. And we will catch you, well, Ash and I will catch you on Thursday. George will be back with us on Monday. Have a great week ahead. We'll see you later. Bye-bye for now.